Fed's favorite inflation gauge, PCE, did rise 0.2%. That was in line with what had been expected. Here with the first reaction from the White House is National Economic Council Director Lael Brainard. Good to have you with us this morning. Give me your reaction, I guess. Let's just start off there in terms of the number itself. As I said, of course, it was at least in line with what had been anticipated by the economists who follow this very closely.
Yes, I think we've now seen a string of monthly inflation reports that should give us confidence. Inflation is now running at 2.5%, and that is the lowest level since the spring of 2021 when you started to see that supply-related pandemic inflation surge. And that should give us confidence that the economy can continue expanding. We saw good numbers yesterday. And good numbers on consumers this morning. The economy can continue expanding. The labor market can continue solid with inflation moving back to normal levels. So that is a very reassuring print this morning and consistent with what we're seeing in the markets, which is that mortgage rates have come down. They've still got some distance to go, but mortgage rates have come down. Market rates have come down. That's a good picture. Of course, still big affordability challenges that continue to be the focus of the president, the vice president, in terms of continuing to lower costs for American consumers.
Yeah, interesting. You went to mortgages, but you did mention, of course, saying the labor market is solid. I mean, after the last jobs report, of course, there were any number of investors, at least, Lael, questioning whether we were headed into a recession. Now, that's calmed, but I am curious as to what your expectations are going into this next jobs report that we will get in a week's time.
Yeah, so since that time, of course, we've seen jobless claims coming down, and they're at quite modest levels, similar to what we saw earlier pre-pandemic. And again, we've got a resilient consumer, several pieces of data that suggest the consumer remains resilient. You know, real incomes have gone up. Wages have risen faster than prices. So most American households have more money to spend, and that should sustain the economy. And it's really good to see inflation coming back down to more normal levels. Again, though, the focus has to be on lowering costs. That continues to be a real pain point, particularly in areas like housing, healthcare, where the president and the vice president are very focused.
I wanted to, you mentioned most households have more money, but I wanted to mention a couple of lines from the Dollar General earnings call yesterday. Of course, they're saying that most of their customers are earning around $35,000 or less annually, and they say the majority feel worse off financially than they were 6 months ago, and also said, quote, more of our customers report they're resorting to using credit cards for basic household needs. And approximately 30% have at least one credit card that's been maxed out. What's your view on that? Are you concerned about things turning on that lower-end consumer price point?
Very worried about affordability, particularly for working families and middle-class families, frankly. Healthcare costs are just too high, and I think we've seen some progress with insulin costs that the president and the vice president have brought down to $35. That's a big benefit to many families that rely on insulin. We've got other drug prices that we're seeing now being negotiated for Medicare for seniors. But let's face it, health care is a major burden for many American families. And we're continuing to see that families find prices at the grocery store too high. And that's why we are asking companies to pass on those savings to consumers. The one bright spot I will say is gas prices have come down. They're about $3.35 nationally, below $3 in some states, and that's a benefit, a reduction of about 50 cents since last year, lowest driving costs going into Labor Day that we've seen in 3 years. So still need to make progress.
There's been a big debate of late no doubt you're, I'm sure, very well aware about the extent to which Vice President Harris should embrace the record of President Biden, the administration, of course, that she's been a part of as a deputy. When it comes to your brief on the economy, should she be loudly celebrating the economic achievements of this White House or hinting there at some of the issues in your last answer, given the inflation, given the way that does affect everyone? Does it make sense to distance herself a little bit?
So I can't speak to the campaign, as you know. What I can do is say that nobody is resting on any achievements. The president and the vice president are completely focused on continuing to work every day to deliver for middle-class Americans. And so we are very focused on lowering costs. You know, we need to build 3 million more houses to start to bring housing costs down. We have a plan to do that. We're going to need some bipartisan support. It's unfortunate that Senate Republicans blocked the tax credits that would have resulted in a down payment of 200,000 affordable homes. But look, every day, I think the president, the vice president are working to lower health care costs, lower housing costs, getting rid of junk fees and credit card fees. So no, everybody is focused on the work that is necessary to deliver for American middle-class families.
Dr. Brainard, we've been looking through the estimates for the August jobs report coming out 1 week from now. How should we be modeling the impact of immigrants, legal or not, on jobs growth and the growing supply of workers in America?
Yeah, so as you know, those data are patchy. But what we do know is that participation in the labor force, particularly among working age people, is the highest we've seen. And that is true of American citizens. And if you look at employment rates, also true for American citizens. So what we're seeing is a expanding set of job opportunities and people that are responding to those job opportunities, in many cases by going back into the labor force. And that's a positive, of course, for incomes. It's a positive for the overall economy.